Getting our couple of companies on our radar on the back of earnings that have come through. Tips Industries is one of them. The company has reported its fourth quarter numbers. The revenue is up 22% for the quarter gone by, but the EBITDA margin has seen a decline. In fact, just to tell you more about the numbers, on a quarterly basis, the EBITDA margin has dropped almost 300 basis points, and in Q4, it's the weakest margin that Tips has posted compared to all the other quarters of the year. Q1, Q2, Q3, they were much better off in terms of the margin. Full year picture looks actually quite good. The company's managed a 29-30% growth at the top line level. That's the full year that I'm talking about. And that's with a profit growth of about 66% and on a very strong EBITDA margin of just around 65%. So that is Tips Industries for you. So what's the path ahead looking like? There you go. Yeah, you have the full year comparisons up on the screen as well. So what is the path ahead looking like? Well, let's get a conversation going with Kumar Taurani, Chairman and Managing Director of Tips Industries. Mr. Taurani, good to have you on the show. So let's just start by understanding the dip in the margin. Maybe it was the seasonal factor that played out, but just tell us, because for the year as a whole, you've managed a very strong showing on the margin. So when we look forward to FY25, just start by telling us what sort of a top line growth and what kind of a margin profile are you hoping to maintain?
See, I always committed to my shareholders and all of you, please treat us as a yearly company. We have a lot of content cost in the last quarter, around 23 plus crores. So that's why our profit is down, and we write off our entire content cost in the same quarter. So that's the impact. But if you calculate on a yearly basis, so you will find we have done 29-30%, as you mentioned, top line growth and 66% in PAT. So again, for the next year also, we have targeting ourselves to grow by 30% top line and 30% bottom line.
30% top line growth, 30% bottom line growth, got that. And I got your point that Q4 was an aberration because of content cost, but steady state margins for the year as a whole, do you think you'll be able to remain in that vicinity of around 65%?
No, 30% I commit, but we really put a lot of hard work to achieve maximum. And at present, I'm projecting 30% top line, 30% bottom line. But if becomes more, I will be happy. Shareholders will be happy. We all will be very happy.
No, sir, I meant EBITDA margin, sir. At the operating level, I meant at the EBITDA margin level, what is it that you're hoping to maintain?
Yeah, EBITDA also, if you compare accordingly, we will maintain that.
Right. So, Mr. Taurani, you are highlighting that there were some content costs that increased during the quarter. So, what is the spend on content that you are envisaging in financial year 25? And what's the pipeline ahead when it comes to films and the songs?
See, we have many artists we are signing, and we have Ishq Vishk, and there is another movie called Buckingham Murder. Then there is one David Dhawan and Varun Dhawan movies coming up. Also, we are discussing with 2-3 other producers. So our Tips target is that we release 10 movies a year, including regional languages, film music. So including regional. So that's our target this year, and I feel we will hope. And our normally we invest around 30% of our top line for the content. So this year also we are keeping around 25 to 30% in that range to invest in new content.
Okay. And is this going to be, front-ended, back-ended, or evenly distributed through the year? I mean, I know it's hard to predict these things depending on how content is generated. But you mentioned a couple of important projects right now. So, can you give us a sense of how will the content cost 25 to 30% of your top line? How will that be distributed through the year?
Distributed to whom? To producers? Yes, actually.
No, in terms of the content costs that you'll have to incur.
Yes, yes.
Will there be very heavy content cost in Q1,
yes,
for instance?
Yes. So, no, I don't think. See, it's not in our control. See, we don't know when producer is releasing his film. When we acquire, I think around 8 to 12 months, between 8 to 12 months, we acquire the music rights of the film. And sometimes producers says, I'm releasing in this quarter, but it get delayed. So that's really is not in our control, in our hands. But that's for sure we are releasing 8 to 12 movies this year. And our content, we manage that way. We don't incur more money as we budgeted that.
But Mr. Taurani, your number of new songs that you added in FY24 was lower compared to FY23. Why is that so? Is there something that has transpired, or is it a conscious decision from the management to focus on quality? Also, part 2 of my question is, you have also forayed into regional music. How's that panning out for you?
Yes, absolutely. You're right. We are really focusing on a quality music. Maybe this year you will see further dip in the song, a quantity of song. We are now going for a quality rather than a quantity. So that is the focus. And I feel we will releasing less than 200 songs this year. So maybe there will be some of the last year's carry forward maybe there. But our target is we should release around 150, 200 songs.
Okay, 150 to 200 songs. So can you just give us a breakup? Where will the bulk of the content cost be incurred? I mean, in terms of maybe languages, is it going to be more regional, more Hindi?
But our
Some
focus is
idea of the expense as well.
Our focus is more on Hindi. We are a Bollywood company, Bollywood music company, Bollywood film is a separate company. So we are a Bollywood company. Our focus will be to invest maximum on Bollywood. But if there is any opportunity in regional like Punjabi, our focus is on Punjabi, Telugu and Tamil also. So we are always in the market. We search for good content. So if we get opportunity, we'll definitely invest in that as well.
Sir, just a question on the buyback. Your buyback is at 625 rupees per share, right?
Yes,
If we have the right
yes.
numbers, which is substantially higher than the current market price. So just take us through the thought process. Why such a huge premium to the market price? But at the same time, I don't think promoters are participating in the buyback. So just run us through the rationale here.
See, two things. There is we have a certain limit to buyback on the price. If I keep a low price, people won't give their shares. I wanted this year that my minority shareholders should make money from us, and this money they will get in their hands, and it's also tax free. So that's why that was the thinking. Okay, if we kept it at 500 rupees, so nobody could have given us. So we wanted to our minority shareholders to make money. So that's why we have kept a more price.
One final question, Mr. Taurani, very quickly, if you can summarize this for us. You've had a licensing deal with Warner Brothers as well. What do you expect to earn from that in FY25, if you can tell us that?
I think substantial amount coming from them also. Top lines, I feel top lines around 30-35% comes from them. So you can calculate that way. But including Warner or many other things, our top line projection is as of now is 30% top line, 30% PAT.
But so just to understand the deal with Warner, so you'll be getting Warner content, and then I believe it's going to be distributed onto Meta, to YouTube. Just tell us, how this works, and at what point does the revenue accrue to you?
Absolutely. So we had a big deal with Warner for 4 years, and we have taken MGs, minimum guarantee business they will do. And if they do further than that, so we will get overflow from that as well. And they will pay us amount in equal four installments. So every year-on-year basis, they will keep giving us monies. And we will book in our books whatever actual business happens every quarter. So that is the idea. That way we are handling this Warner entire deal.
All right, Mr. Taurani, we leave it at that. Thank you so much for sparing time and sharing your thoughts on the quarter gone by and the road ahead as well for Tips Industries. That was the management of Tips Industries on the quarter gone by. Stocks fairly quiet in today's session, down 1% at 464, but the buyback price is at 625. Some numbers flashing on your screen.